So trading lions, today I'm going to show you a simple and awesome moving average trading strategy. We're going to use the 8 moving average and the 200 moving average. So let's add them to the charts. Go inside indicators and type in the moving average. Once you do that, double click on it and open up 2 moving averages. We will also need to change the periods of them. Change them from the length of 9 to 8. And the second one, change the length of 9 to 200. Once you've done that, you will see 2 nice lines on your chart. And the moving average lines will give us a signal to enter the trade. Now, to use this strategy properly, we ideally want to wait for a 200 moving average cross before we do anything else. So let's just play the tool and see what happens. And as you can see, a nice cross of the moving average has happened over here with a nice bullish candlestick. Now this is where we ideally want to focus on our charts, and we want to be looking for an entry position, right? This moving average crossover with a nice candlestick tells us that the trend has now swapped direction. So the 200 moving average line over here is telling us the trend direction. If it's trending towards the downside, the moving average line will be above the candlesticks, and vice versa. If it's trending towards the upside, the moving average line will be seen below the candlesticks. Now, the 8 moving average line is our entry candlestick. So let's just see what happens when we play the tool a little bit further on. So as you can see, the market carries on trending towards the upside. But we already know that the moving average cross of 200 has already happened. It pushed towards the upside. Usually the market moves like this: push, exhaustion, push scenario. This is what we see over here: push, exhaustion, push scenario. Now the exhaustion is where an interesting thing happens, right? So we had our candlesticks bundled up over here, and then it crossed towards the downside. Now when it crosses towards the downside like that, we are good. We don't want to enter a trade towards the downside because we know that the 200 moving average is well below the candlesticks, right? So it's indicating us that probably it's on a nice continuous uptrend. So we want to be looking for a buy-in trade. Now, where can we see a buy-in trade and a buy-in opportunity? Well, in this case scenario, since we are long and we want to buy, we are waiting for a candlestick crossover of the 8 moving average, right? The smaller moving average. So as you can see, this candlestick over here is a nice cross. You could have potentially entered the trade for a 1-to-1 risk to reward ratio. Since you're day trading, or if you're scalping, you are aiming to just go 1-to-1 risk to reward. Nothing major, nothing big. 1-to-1 or 30 pips maybe if you're using 1 hourly to 4 hourly time frames. I'm pretty sure if you're day trading, probably 1 hour is the maximum you will go for. Anyway, you will enter this trade over here, or you could have even entered, probably is even better, with a bullish engulfing candlestick. This candlestick over here swallows this white one, which indicates further bullish pressure. So if you enter the trade just around here, it would have been a nice trade towards the upside. As you can see, it continues to shoot up. That's not to say that this candlestick over here, this one that we spoke about, is not good enough, because it did cross the 8 moving average line, which is already an indication to buy, and it would have been a profitable trade either way. We can also see another buying entry. Can you guys spot it? Leave a comment down below. If you spotted the entry, well then it would have been this bullish engulfing candlestick. As you can see, this blue candlestick provides us with bullish confirmation, a nice push towards the upside. This previous area of consolidation over here, resistance, support, has now been broken with a huge push towards the upside. Bullish engulfing candlestick swallowing this white one over here, further push towards the upside, also breaking the 8 moving average line, which again suggests further bullish pressure. So we would enter the trade over here. We always want to enter trades on candlestick closures. So if the timer is running and the candlestick is still moving about, the wick is still going up and down, you don't want to enter. You want to only enter when the candlestick closes and a new one begins to form. This is your entry confirmation. This is when you are guaranteed and know that a bullish engulfing candle happened or a cross has happened. If you don't wait for candlestick confirmations, which a lot of beginner traders do not do, you will be a failing Forex trader. Always wait for candlestick closures before you enter your trade. So let's just play the tool once again and see what's going on. So as you can see, a nice cross towards the downside, right? So after this cross towards the downside, we are waiting for a pushback towards the upside. Where's the pushback? Well, we can see a nice candlestick over here, right? It pulled back over here outside the 80 MA line. It's now currently shooting towards the upside. Since we know the 200 moving average is around here, it's still a buying opportunity. We are only aiming to buy. We never want to sell in a bullish market. So what do? We buy over here, and let's see what would happen. It shoots towards the upside very nicely. 1-to-1 risk to reward ratio, following a small trend. Again, resistance, support, bullish engulfing candlestick over here. Could have been a nice entry once again, a nice re-entry. Boom. It would have been, you know, two nice trades, two nice opportunities towards the upside, and you could have profited a lot of money by using this simple and effective Forex trading strategy. So let's have a look at the bearish example now. It's the same scenario, it's just everything's upside down. So we're waiting for the 200 moving average to be above the candlesticks. Well, the 8 moving average is going to be an indication for us to sell the trade. So let's see what happens. It shoots towards the downside with a bearish engulfing candlestick, right? Bearish engulfing candlestick, very nice indication towards the downside. You could potentially even enter the trade over here short with a bearish engulfing candlestick because it did cross the 8 moving average as well. You would literally be entering on the candlestick cross and the moving average cross, which is totally fine. You can do that, and it would have been probably a great trade towards the downside, as you can see, trending towards the downside nicely. But if you wouldn't have done that and you would have waited, which is fine as well, you would have probably waited for a push outside the 8 moving average, right? So that's the 8 moving average. As you can see, the 200 moving average is well above the candlestick. So we're waiting for a push and then a push back, right? So this is the push back. Would have been a nice trade towards the downside. As you can see, stop loss and take profit, same thing, 34 pips, 34. In this case, you could have done, you know, 2020. Wouldn't have mattered too much. You wouldn't have been stopped out anyway. Very nice trade over here, nice trading opportunity because it crossed back towards the downside of the 8 moving average line. As always, we have a better trading opportunity. I preach about this all the time. A nice bearish engulfing candlestick swallowing this previous buying candlestick shows bearish pressure, also crossing the 8 moving average line, which is super important, and it would have been a great trade towards the downside. As you can see over here, 1-to-1 risk to reward. You don't want to be risking 2-to-1 to 3-to-1. It's a quick and simple scalping day trading strategy that you can use in Forex and stock markets as well. It really does not matter which time frame you use. I found the best success on the 5 minutes if I'm really scalping, and on the 1 hourly when I'm just day trading in general and have a lot of time on my hands. So let's just see the strategy further on. As you can see, a nice push towards the downside. As always, push exhaustion, push scenario. Now another consolidation is happening, right? What we want to do, right? We want to wait for candlestick confirmation. So look, push happened, right? It crossed through the 8 moving average. Look, the candlestick, the blue one over here, this is the buying candlestick. It crossed back towards the upside. So what do we want? We want to wait for a cross back of the moving average, right? So 8 moving average has been crossed back again with the bearish engulfing candlestick. What do you think will happen? Is probably gonna go towards the downside, which it does, and it could have been a great trade towards the downside. Now this trading strategy is definitely a high win rate. I recommend to use it on Euro USD, especially if there's not much news going on. Usually then the trend will just continue and you will bank yourself a lot of profits. I can guarantee it. I've done this multiple times. It works. And make sure to leave a comment down below if you found success with this trading strategy. So if you did enjoy this video, make sure to leave a like and join our premium trading group. We send 1 free trade on our free group every week and 3 to 10 trades on our premium group. You can find reviews and results on our free group as well. It's forextradingalliance.com. And for now, that's it, Lions. Take care, have a wonderful day, stay safe, and goodbye.